Apple Inc. trading under the ticker AAPL had a market price of $213.88 at the time of reporting. Apple's fiscal second quarter of 2025 highlighted its enduring resilience across products and services. Total revenue rose to $95.4 billion, an increase of approximately 5% year over year, despite a 2.5% negative impact from foreign currency fluctuations. Product revenue rose by 2.7% to $68.7 billion, led by iPhone, iPad, and Mac lines. Services revenue, a key driver of margins, climbed 11.6% to an all-time high of $26.6 billion, underlining the company's ability to monetize its massive ecosystem of devices and subscriptions. Net income came in at $24.78 billion, an increase of roughly 4.8%, while diluted earnings per share rose to $1.65, a gain of 7.8% compared with the prior year. These figures exceeded most expectations and reinforced Apple's capacity to maintain profitability amid elevated global cost pressures. Gross profit margin expanded slightly to 47.1%, up from approximately 46.6% in the previous year. Product gross margin contracted to 35.9% due to a less favorable mix and the effects of FX, while services margin improved to 75.7%, buoyed by growth in software and subscriptions. Apple's board authorized a 4% increase in the quarterly dividend to 26 cents per share and approved a new $100 billion stock buyback program in addition to the $25 billion already repurchased during the quarter. In total, the company returned approximately $29 billion to shareholders via share repurchases and dividends. Looking ahead, Apple offered guidance for the third quarter, forecasting low to mid-single-digit % revenue growth compared with the prior year. Management warned of potential cost headwinds of around $900 million due to existing tariffs in its supply chain. The projected gross margin for the upcoming quarter fell between 45.5% and 46.5%, reflecting anticipated cost pressures. Strategically, Apple continues to reduce its dependence on Chinese assembly by shifting more smartphone production to India and directing product manufacturing like iPads and Macs toward factories in Vietnam. The company is also investing in US-based chip manufacturing, including a new plant in Texas to support supply chain diversification and reduce exposure to geopolitical risks. On the innovation front, Apple is making moves to close the gap in AI capabilities by developing proprietary models and exploring partnerships with firms including ChatGPT and Google Gemini, aiming to integrate artificial intelligence into Apple Intelligence for future products and services. This comes as a renewed emphasis on AI has begun to contribute to higher valuation multiple for the stock. In peer benchmarking, Apple trades at a premium price-to-earnings ratio near 33, significantly above its historical average of 50 to 25, reflecting investor confidence in its ecosystem moat, recurring services revenue, and brand strength. Enterprise value relative to sales also remains elevated compared with cloud software and hardware sector peers due to market expectations of sustainable growth. However, independent discounted cash flow valuation models estimate fair value in the range of $97 to $116 per share based on conservative growth and cash flow assumptions. Composite intrinsic value estimates that combined DCF and peer valuations average near $155, implying that current market price may be 20 to 30% above intrinsic value. Technically, Apple shares have outperformed broader equity benchmarks recently, in part due to optimism around AI capabilities. Relative strength indicators suggest neutral to slightly bullish momentum. Critical support zones exist around the $215 area, corresponding with the 200-day moving average. Resistance appears in the $240 to $250 range, where a breakout could unlock further gains toward the mid-200s if Apple continues to deliver strong AI integration and services expansion. In summary, Apple's fiscal second quarter 2025 results demonstrated its strength in growing both hardware and services revenue while maintaining solid margins and returning significant cash to shareholders. The company is moving quickly on AI integration, supply chain diversification toward India and Vietnam, and US manufacturing investment. The key question investors face is whether the current premium valuation multiples are justified by execution on growth initiatives. Value-oriented investors may consider waiting for pullbacks toward intrinsic value estimates near $150 per share. On the other hand, growth investors confident in Apple's AI strategy and ecosystem growth may view the current price near $213 as a reasonable entry point.